It's Thursday and you're watching FreightWaves Now. I'm host Anthony Smith, and coming up, Andrew Cox is going to give us a shipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by Powerfleet. I'm Zach Strickland, and of course we're going to start off the day with that outbound tender volume index. Now, it looks like here at the end we've got a little bit of signs of life. So this is really good news for the carriers out there. It means
Zach, what was that?
Yeah.
What was that? Sign of life?
What do you know? What do you know?
9,200 there. We have 9,300 by the 15th, May 15th. That was the bet. You didn't think it would reach that.
One day does not a trend make, Craig Fuller.
But when you were down here, you were calling me out saying it would no way it would hit 9,300 by May 15th.
Yeah, we'll settle this.
Look at how far that's gone.
You'll get your chance.
All right. The great debate coming up.
Here in a few minutes. Stay tuned for that one. It's going to be good. But don't get your hopes up yet. We've got one day that a trend has not been made yet. We're looking at year over year here. OTVI last year in the green line. We're still well below last year's level, so you're not feeling as good about it as you possibly could from last year. But it is a good sign that we are seeing this increase because we have cleared the end of the month type of factor, and now we have moved into a few days. Craig may have a little bit of an argument, but we'll see. Stay tuned for the debate coming up here in a little bit. So, breaking this down into reefer and van volumes, I have the van outbound tender volume index overlaid on top of the reefer. So where's this increase coming from? Is it coming from reefer, which is traditional this time of year to see some of these reefer volumes increase? We talk about produce season, all sorts of other things. Temperatures warming up. So a lot of that reefer freight starts to pick back up. And we are seeing a nice little push of reefer freight coming out of the United States overall. That has been going up. If we remember yesterday, we talked about it. Reefer activity has increased here over the last little bit, driving up a lot of these volumes. However, most of our outbound tender volume index is that van volume. It does drive a lot of the freight economy. So that has started to click up just a little bit as well. So I guess the big question is, where are those volumes picking up? As a carrier, I want to know exactly where to go. Where can I rely on some contracted freight volumes? And looking at our tree map of the outbound tender volume index weekly change, we can see that the Atlanta, Georgia market has had a big increase. This is the biggest market in the United States for outbound freight volumes, and it had a 12.5% increase week over week. So it's a big market to watch. Check out Savannah over here, 20.9%, sitting on the port out there. A lot of volumes coming out of Savannah, especially when you're talking about retail shipments. So does that mean that we are starting to see some pickup in the freight economy versus, on the retail side of things? Amazon, et cetera, Home Depot have a lot of DCs down there in Savannah. A lot of imports have surged into the country here in the last couple of weeks. So Savannah is going to be a big one to watch, especially looking at a 20.9% increase. But again, we've got about a 50-50 mix in terms of volumes increasing, decreasing, so it's keeping the market relatively in balance. So we're not seeing a huge push either direction, but there's a couple of markets to watch. Breaking down Savannah market, you can see it's not really having an impact on tender rejection rates. If you look down here in this chart, you've got a green line, tender rejection rates starting to tick up just a little bit, but not a significant amount, so don't rely on spot market activity down there. But you see those volumes have bounced. Since April 21st, Savannah has really taken a big increase on their volumes. That's a pretty decent sign for carriers that operate out of that market. Atlanta, Georgia right here, moderate increase, 12.5% on the weekly increase in volumes, breaking down the Atlanta market. The single biggest market in the United States. Let's see what's going on there. Not as clean of a signal in the Atlanta market. You can see that it has reefer volumes, there's your dry van volumes. I've got this one pulled out quite a bit because we've seen a declining trend in the Atlanta market over the last year or so, but now things have actually picked up well over the last half of 2019. So some decent signals out of some interesting markets in the United States right now. So what does this mean moving forward? Stay tuned to the great debate here in a little bit to find out. That'll do it for today's Carrier Update.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
Well, it's Thursday, so we've got the new weekly initial jobless claims data from the BLS, and we've got some good news and some bad news here. The good news is that it is trending downwards. This is the lowest value that we've had in the 7 weeks since the coronavirus pandemic and the lockdowns began. But the bad news here is that although it is trending down, it's likely going to stay above 1 million through the middle of June or so. So there's several more million people that are going to be added to unemployment benefits that are going to try to apply for this in the coming weeks. And I think that this really has some long-term effects on our economy.
Gotcha. And Andrew, when we're looking at this is initial claims, right? So these are a rolling total of Americans. And when we look at the last 7 weeks, it's somewhere over the 30 million, 33 million mark.
It is, right. So we had 3.2 million this past week. It brings the 7-week total to just over 33 million. So with a workforce of 165 million, we can do an implied unemployment rate of over 20%. So the shock is just so deep and so quick that I think the long-term effect to this short-term shock is really going to be on my next slide here when we look at when we look at consumer sentiment from the University of Michigan, and if this next slide will come up here, we'll look at that. But it has tanked in the last month.
So when we're looking at one of the things that when we are talking about unemployment, I mean, now the initial jobs claims is a big, exciting number. Everyone talks about it. It's that Thursday release. But I think one of the areas that doesn't get enough attention that I think people are going to have to watch closely is going to be continued claims. These are going to be Americans that are continually unemployed, and we still see that number rising. I think it's somewhere over the 20 million mark, and it's a little bit lagged compared to the weekly jobless claim, so it's another week behind, so it's not as timely. But I think that's going to be the number that you're going to need to watch closely when you're looking for some kind of recovery side.
Yeah, I agree, because when people get back to work, that those continued claims will eventually fall down. I mean, that's what we're hoping for. This initial jobless claims will likely continue to be in that 1 to 3 million range for a couple months, but you're right, we'll be watching those continued claims very closely, and we'll also be watching this consumer sentiment, because again, I think this is the long-term effect of that very deep and sharp short-term shock. And again, we've fallen down considerably. We're now near 2010, 2011 levels, and just this, I think, it's weighs mostly on durable goods. We talk about when the freight volumes are going to recover, when the economy is going to recover, and I think that the demand for retail goods, for eating out, things that people do normally, I think that's going to pick up pretty quickly as soon as they feel safe enough to do so. But it's those durable goods, the cars, even the new homes, not exactly a durable good, but the new homes and big appliances. I think that the demand for those are going to take several quarters to come back. This is one reason that transportation economist Noel Perry has said that he doesn't think freight volumes will reach pre-crisis levels until 2022 or 2023. I don't think it'll take that long, but I do think people need to take into the idea that the demand for durable goods is going to be down considerably for several months.
And you hit on a really big point there. I mean, when we're looking at consumer sentiment, consumer confidence, there's a lot of factors that go into it. And one of those, we just spoke about it, is their job outlook. And so if consumers aren't feeling confident about their jobs or their outlooks for their employment, they're going to make less big ticket purchases, and it feeds right into housing. When people are making big ticket purchases, when we're looking at furniture, appliances, things like that, that all feeds into freight as well. And that's definitely going to be an area, as you mentioned, it's going to be impacted greatly. We're, of course, seeing automotive trying to ramp up. We're surely going to see some kind of incentivization, I'm sure, to kind of get those consumers back out there. But Andrew, great overview, amazing updates as always, and that's going to do it for this shipper update, and that's also going to do it for this episode of FreightWaves Now. Don't worry, we're always going to have a ton of content coming out throughout the day, and stay tuned for that great debate and stay active in those Slack channels.